Hey, how's it going? I wanted to make a video today to all of the new traders out there, or the people that are considering getting into trading. You know, maybe you're a 50-something person like myself who is, deep into their career and looking to kind of shore up that retirement account, or maybe get into a whole different line of work so you can enjoy some more of your free time. Or maybe you're a young person. I think this video is probably something that young people should look at. I noticed that there's a tremendous amount of advertising out there, geared towards, luring people into get rich quick ventures, if you will. Now, that doesn't mean you can't make a tremendous amount of money trading. You can make a lot of money trading. But there's a cost of acquiring knowledge in any venture that you may want to get involved in. And that cost of acquiring knowledge could either be time or money. And if you're anything like me, I think you would probably prefer to spend more time and less money. So that's kind of the focus of this video today. Kind of talk about some of the traps and pitfalls and things that you may run into, in your search for that side hustle or that business, or maybe you've zeroed in on trading and you don't really know where to start. I'll tell you that it's actually pretty easy. There's nothing really difficult about the mechanics of trading. Trading is mostly a mechanical function, meaning that you're going to get into a market and you're going to get out of a market, and depending on whether or not you guessed right, you're either going to win money or you're going to lose money. So how do you improve your probabilities of winning more money than you lose? Well, the secret of that is developing a trading system or developing a set of indicators that you can backtest, on a simulated market, and modify and tweak until you get to an appropriate win rate percentage, which my recommendation would be 85 to 90%. With an 85 to 90% win rate, you can make a tremendous amount of money. Now, the biggest thing you're going to run into is you're going to have that internal struggle. I would argue that all traders face the same internal struggles, just, based on their experience and how they may have learned to manage that along the way will determine, how successful or unsuccessful they may be. You see, trading takes a lot of discipline. It really is a game of discipline. Once you get your set of trading indicators set up and you begin to backtest them until you get that 80 to 85% win rate, when you reach that level of consistency and you decide to go into the live markets, you should be in a pretty good spot to where you may have, or you've demonstrated to yourself that at least historically, the indicators in the trading system that you are using have worked out when certain things happened. Now, what do I mean by that? Well, I, for example, use a moving average crossover system, whereas I have a 6-period moving average and a 3-period moving average. Now, I trade on a daily chart, so that's 6 days and 3 days of moving averages. The 6-day moving averages smooth out and adjust to market fluctuations slower than the 3-day. So when the 3-day moving average were to cross below the 6-day, it would indicate a trading setup that I would then apply additional filters that are a part of my trading plan. And if all those filters line up, well, then I'd place a trade. And vice versa, it would go the other way where that 3-period moving average crosses up over that 6 period, meaning I'd go long in the market, or I felt the market was bullish and I'd place a trade, provided that the additional filters in my trading plan checked out. So what I've learned in my trading plan is that, it typically triggers a trading setup about 1 to 4 times a month. So, on average, there's a trade set up every week to every 10 days. It's that time in between those trade setups that's the most difficult. This is where you really have to be disciplined to stick to your back-tested, proven to you trading signals. It's when you decide to jump into the market because you've got a hunch, or you got a tip from a buddy, or you read something in the paper, or you tuned into the news and, stock XYZ is the latest rage and everybody's buying. My experience has told me that ship has sailed, and you're probably getting into that market during the last push before it goes the other way. Generally the public is really the last to know. And if you're watching this video, you're more than likely in the same boat I'm in, where we're the public. So be mindful of news. On a daily chart, typically the news is already factored into the price. So yeah, you may also be someone who's invested in a trading course, or has some experience trading the markets. You just didn't really have a structure or a plan that you needed to follow, and that's not really your fault. I mean, a lot of that, when you hear about it and we talk about it, it sounds pretty simple, but a lot of that is really what's missing from a lot of what I've seen or watched or heard about. It's one of those things where, if you've got enough money that you can keep feeding into the market, the hope would be that you would eventually figure it out on your own. But I can't imagine you really want to do that. And, I know I wouldn't want to do that. And when I first got into the market, about 30 years ago, we didn't have computers. We didn't have, all these fancy trading systems. We had newspapers that printed out, the results from the day before. And you made a trade at your local stockbroker, either in person or over the phone. But, here we are in 2025, and, they've made it very, very easy to get involved in the trading game. And anything that's easy to do that involves that much risk is, in my opinion, just a recipe for disaster. So if I had to tell you what the most important thing that I have learned in my journey, it would be 2 things. It would be learn discipline. And I guess, how do you learn discipline in the trading markets? That's a constant process. That's, reaffirming to yourself that you're willing to tune out all of that outside noise and just follow your trading plan. And of course, you've got to back test that trading plan. So let's go over how you do that real quick. So if you were to log into your trading software and you were to, open a chart up of whatever. It could be, the S&P, it could be corn futures, bond futures. That's irrelevant. But what you would do is go back a year in time on a daily chart. And so then the first day that you would look at would be the bar that's visible on the far right-hand side of the chart. You would look at that bar, you would evaluate it against your trading signal. In the case we talked about before, a 3-period crossover over a 6-period crossover. Do you have that? If you do, you look at the other filters in your trading plan. If you don't, you move on to the next bar. And you repeat that until you get to that initial setup, which is that 3-period over the 6-period crossover, or under the 6-period crossover. If you don't know if you haven't heard the term bullish or bearish, all that means is that if you're bullish, you think the price is going to increase. If you're bearish, you think the price is going to decrease. So getting back to the back testing, you would move that bar one day at a time from the right-hand side of the screen to the left and look for a trade setup. And when you get a trade setup, see if it passes the additional filters that you come up with. And if it does, take a trade. Now, this is a simulated account, so there's no money involved, so there shouldn't be any emotion. And write down the trade in a trading log. Get yourself a notebook. You don't need anything fancy. I mean, I do it in an Excel spreadsheet, but you can do it however you want to while you're developing and fine-tuning your trading process. Write down the date, write down the symbol, ZB, 30-year bonds, ZC, corn, the ES, the E-mini S&P, YM, the Dow, whatever it is. Could be Apple, could be Sprint. That's really irrelevant. So the date, the symbol, the next column you'd write down L or S for long or short. Long meaning that you think the price is going to go up. Short meaning that you think the price is going to go down. And your entry price. And then you would advance the page to the next day's bar and reevaluate. What happened on that day? Did the price go in the direction that you had anticipated? And if so, did it hit your profit target? If it did, that's a winning trade, and you would log that result on your trading log. If it didn't, and the trade was still in play because it hadn't gone down in an up trade, it hadn't gone down and hit your stop loss, you would advance to the next bar. And then the next bar until you either won the trade or you got stopped out. And you would do that over that year's time, and you basically gain a year's worth of experience in about 3 hours, depending on how quickly, you go through it. Now, don't rush. Tally up your score at the end, see how many trades you won versus how many trades you lost. In these trade setups that you're looking to fine-tune, while you're back trading, you should be looking for at least a 1-to-1 risk-to-reward ratio, preferably 1-to-2. 1-to-3 is awesome, but you can make money on a 1-to-1 risk-to-reward ratio in the futures market. You do that by managing your risk with your stop loss. And as you fine-tune your trading plan and you get up to that 85 to 90% win rate, then really 1 out of 8 or 1 out of 9 trades is going to be a loser. Now, that doesn't mean you can't have 3 or 4 losers in a row, but over a measurable size, like a bracket of 20 trades or a bracket of 25 trades, again, at that 85% win rate, you can make money with a 1-to-1 risk-to-reward ratio. Man, it's so windy out here. Standing next to the river, southeast Iowa, trying to get this video out to you. It just popped into my mind. I pulled over. I was thinking, man, I got to make this video for those that are out there that that are wondering and looking how to get into this trading game, because with all the hype in the media out there, you know, people selling courses and people promising millions, you know, overnight, and, you know, for $19 a month, I'll send you, you know, X number of stock picks a week, and all you got to do is sit back and place the trades. Well, I guess you could do that, but, you know, as the old saying goes, teach a man how to fish, he'll never go hungry. So I'm encouraging you to learn how to fish. And how do you fish? You learn to fish by back testing a trading plan. Because there's probably 1,000 different gurus out there selling trading plans, and I would argue to say that, you know, there's probably a large percentage of them that work, but it's how you execute them. And the only way you know for sure if you've got a good one is you've got to back test it over a period of time and then see what the results are. So I hope this video helps you out. If you liked it, please subscribe to the channel. You know, I make a video, you know, once or twice a week, mostly educational, you know, helping to point people in the right way, you know, correcting mistakes that I might have made in hopes that you don't make them as well. So subscribe to the channel if you want to see more videos. I'm going to go ahead and sign off. Peace. Have a blessed day.